Hey guys, Bradley tuning in, coming out with another video, and today we're talking about how to qualify for a mortgage. Now today we have a special guest named Mark Albert. He's helped me with many clients, but he's really a published author, a speaker, and an all-around great YouTuber who puts out content about things like interest rates and market updates for you as well online. We'll put that down in the comments below. Check out this interview. I hope you're gonna get a lot of value at it, and I'll see you on the other side.
Thank you, Mark, for coming today. I appreciate you attending our channel and giving us some awesome insight.
Yeah, it's great to be here.
So today we're going to talk about how to get a mortgage and kind of all of the things that come with that.
Sure.
So I guess to start us off, let us know, what do you really need when you go to apply for a mortgage?
Well, what you need to do, basically when it comes down to qualifying for the mortgage is, it depends on your income, it depends on your debt situation, your credit score, and how much money you have available for down payment and closing costs. Mm-hmm. And so we put all those together and think through if you qualify based on the current government stress test. Right. So the current government stress test is basically whatever the contract rate is, whatever the bank will give you as a rate, we got to pretend it's 2% higher to see if you qualify as if it was 2% higher. So we work all that things to find out how much house a person qualifies for. And that's an important thing, right? It's an important part is making sure you're qualified, you're pre-approved in essence to get the house that you desire to get.
So there's been some big changes going on in the industry where now it's a lot more difficult. You kind of hinted at the guideline changes.
Yeah.
So what kind of impact would you say that's now had on people that have wanted to apply for a mortgage? And if someone was now going to apply and had they gone 2 years ago, what kind of changes are they expecting?
Well, that's a good point because about 3 years ago or so, a lot of people, they were able to get a mortgage, and I remember I did a mortgage with a young couple just a few months before the stress test came into play. Right. And they just were able to get in, and then if it was 2 months later, they wouldn't have been able to qualify. So a lot of people, and there was a certain client I was with just a few weeks ago, mm-hmm. and I did the comparison. They qualified for $320,000, but then I showed them if we remove the stress test, they would qualify for another $60,000 more. So that's a big gap.
That's a big gap,
right, for their situation.
So how many people would you say that's impacted? And I guess what could someone do to overcome that new challenge that buyers are facing?
Well, yeah, it is a new challenge. Sometimes people, they're partnering together. I've had some young couples where one of the parents would get involved, help them out. Mm-hmm. Maybe they were on title or they gave a little bit extra. So if you let's say you qualify for a mortgage of $400,000, and let's say you're going to put $100,000 down. The more money you can put down, the more house you can qualify for. So if income goes up, you qualify for more. If the amount of down payment goes up, you qualify for more house. So those are pretty important. And I will say this, that consumer debt really does hurt you from a qualifying standpoint. So if you plan to get a house in the next year or so, not the best time to add a lot of consumer debt. Right. So if you're thinking of financing a car for $20,000, then that could be a problem. So just think about that as you're preparing.
Yeah, so Mark and I are able to work together on a lot of clients, and Mark has done an awesome job, and thank you for that. But I think one of the other questions a lot of people come when they're asking me about the mortgage side is, now you've gone in and you've applied for this mortgage. Yeah. How do you kind of protect them from any changes in your industry, whether the lender changes their mind or the interest rate changes? What can they do today, and what kind of protection do they have in place working through a broker like yourself?
Yeah, that's a good point. So what we got coming up is March, April, and May, we have interest rate announcements from the Bank of Canada. So some people who are shopping right now, what they can do is I would be able to kind of lock in the rate for 90 days, 120 days, depending on which lender we would go with. And so that protects you against a potential interest rate hike. So obviously if the rate comes down, that's good for you. But if the rate goes up, then you can protect yourself in that sense.
Right. Would you find that having a rental apartment or some kind of additional suite in the unit, how does that kind of impact when you go to qualify?
Yeah, that's a good question. So let's say you're going to get a house and there's a rental property, or you're renting out the basement. So first of all, the lender's going to want to have a signed lease agreement before the close date. Okay. So if you get a house that already has someone renting in there and you just take that over, that's really great. But the income that you receive can count in a positive way to help you qualify for maybe a little bit more of a valuable home. So that could be a good scenario where you look for that. So that could be a positive, good investment for some.
Yeah, one of the things on that note too that I think is really important for our audience is if you actually live there, one of the things that I learned is it actually will count as 100% income for your home versus if you don't, if it's a rental suite strictly, it's only 50% income, which I think is quite cool.
Yeah, that is good.
Now, for individuals like us, we're self-employed, and when I get a client that comes up to me and says, you know what, I work for myself, I have my own business, I kind of give them this face like, oh, because I kind of know the challenges that they're in for.
Yeah.
So maybe you can shed some light on what that looks like for a buyer that is commission only or working self-employed income.
Yeah, that's a good point. So basically, for people who are employees of a company, we can use your total gross income, which is great. So for someone like us and many other people who are self-employed, you're basically looking at your net income. So some people are self-employed and they'll make a fair bit of money, but with all their write-offs, their net income is a bit lower. So lenders are gonna look at your net income to help you qualify as opposed to your gross. So that could be a little tricky, but there's ways to make it happen. So
now I also know, having dealt with first-time buyers or people kind of entering the market for the first time, what are some of the unique challenges that they face? And I think as well, what kind of trends are you seeing? I guess if we look at the youngsters getting in the market versus the people downsizing, and for those who don't know, you're also in the financial planning side, so you're kind of seeing this flow, and it's a really interesting trend actually of all this money moving from the seniors and transferring to, I think the number was somewhere in the effect of like 20 or 17 or 20% of millennials are expecting money from their parents, or so what kind of trends are you seeing in that regard?
Well, what I'm seeing, a lot of millennials that I'm working with, at times they're having a hard time getting the market for the first time, getting their first home. And so maybe 25% or so of the ones that I'm seeing, a parent of either the husband or wife or one of the two gets involved.
Yeah.
And so sometimes parents will give a lump sum as a down payment, as a gift, and other times the parent is willing to allow their income, because the income is sometimes the key component. They have the down payment, but their income doesn't allow them to qualify. So sometimes a parent will allow their income to stand, and they would often go as a co-signer, or maybe they'd be on title as well. Yeah. And these things all can get worked out. And so in a situation like that, I like to meet with the parent, talk about the pros and cons of on their credit side and so like that. But what I found is parents, they typically obviously love their kids, and they want to help them out, and they know that it's tough out there. So
yeah. Now, as well, so on the real estate side, we see that there's clearly a price difference between a condo and a townhouse.
Yeah.
And I know part of that process of applying is what is the condo fee? Yeah. And I know when you work with my clients, it almost can be two different numbers based on if they go on condo. So can you maybe tell us a little bit, how does that look?
That's a good point. So, okay, so if you're getting a house with no condo or maintenance fee, you typically just qualify, so this is how much house you qualify for. So let's say that same person says, I don't want to get a house, I want to get a condo, right? Yeah. Then we have to add, remember we talked about debt, so debt can work against you. So your condo fee is a monthly obligation, so you're obligated to pay that. So that amount of money works against you in terms of ratio qualifying. So if you just bought a house, maybe you qualify for $500,000, but if it was a condo with a condo fee of, let's say, $500 a month, maybe you qualify for around $450, right? Now those aren't the exact numbers, it's going to depend on your situation, but the size is lower. And sometimes millennials will get into the market first time to a condo.
Right.
Because oftentimes they can get a condo at a reasonable cost with a reasonable condo fee.
Gotcha. What would you say, as a last question, what would you say is a reasonable aim for credit? So, and how can someone actually identify what the credit score is today? Because I know there's avenues for that. So how can you figure out what your credit is, and what is that target number that you look for to get them with that A lender, get them the best rate?
Okay, good question. So basically, if someone's looking for, obviously everyone, A lenders and A mortgage, you're looking at the best rate. And so from a credit score standpoint, let's say you look at Equifax, you need at least about 650 points. So Equifax's scale is from 300 to 900. 900 is the highest. So minimum would be 650. And that's what you want to aim towards. Otherwise, we have to default to an A lender, a B lender. Of course, with an A lender, you only need 5% down on the minimum side.
Gotcha. Awesome. Thank you again. I appreciate all you do for me and my clients. Thank you for attending, and I look forward to doing more videos. If my audience wants to get a hold of you, what's the best contact for them to find you or get involved in what you're doing?
Yeah, well, I've got my YouTube channel, Mark Albert Financial Advisor. You could subscribe to that. Or you could reach out to me on my website, markalbertfinancialadvisor.ca, and then my contact information is there, and anyone can reach out to me that way.
Awesome, and I encourage you guys, my audience, to go check out his YouTube channel. It's actually really good, especially if you want to follow and you get a little more technical on the interest rate side, as well as he loves the Raptors. So if you love the Raptors, you can learn about how that ties into your financial future too. So we're going to leave it there. Thanks again, Mark. And thank you guys for tuning in to learning how to get the money you need to qualify for a mortgage. And hopefully this guides you. And jump in as well. We actually just did a video in the last week or so talking about how to save money to apply for this mortgage. So make sure you check that out as well. We'll see you guys in the next video. Take care and keep it real.
There you go, guys. Now you know everything there is to know about qualifying for a mortgage. I hope you got great value. If you did, leave us a little comment down below. We're also in a subscription race to 10,000. As a thank you, at 1,000 subscriptions, we're going to give a $100 Amazon gift card. So make sure you hit that like, comment, and subscribe. And we're going to continue to put out excellent content. I'll see you guys in the next video. Take care and keep it real.